Guys, what up with the wheelhouse, baby? You guys ready to hit it? You ready to get it? You ready to level up and get with it? Well, it's time to charge those batteries and get the money printer out because we are headed to the moon to stack chips and get paid out. Now, on this channel, no baby stepping, no line stepping, no loose talk, no second thoughts, and definitely no maybes. And like I always say, green lights to the beach, baby. All right, so a few things to talk about. First, I just wanted to welcome you to the wheelhouse. And if you are new to the channel, hit that subscribe button, hit the like button, hit select all so you get the content. And if you are not in the Discord, jump in the Discord. It's free. You can come right in. I put the link in the description. Come on in. I'm going to be in there every single day helping people out. Everybody else is in there chatting and helping people out. And you guys can also not only get in the Discord for free, but you can be part of a community, which is cool. And you can do the Jedi Compound Challenge with us. And, you know, a bunch of people are in there doing trades and testing strategies that I give people to do and that I also teach in the courses. If you do want to upgrade, go to start here and then subscriptions. You can upgrade to Jedi. It's only $99 a month, or you can upgrade it to Padawan, which is $49 a month, which gives you the trade alerts and the Wheelhouse Wednesday. And the Jedi for $99, you get all the courses, the Wheelhouse Wednesday, one-on-one coaching with me. In fact, I think I threw it away. I just got a thing in the mail. It's kind of funny, right here. 25-year Academy for Learning How to Trade with the Pros. Got this in the mail. It's quite funny. What will you learn at our trading workshop? The secrets of Wall Street. Doesn't want everyday investors to know. Dude, I already know all this shit. I already tell it to you every day. Like, I already got that. Major advantages everyday investors have over big banks and institutions. I already told you guys that. They can't sell at 8%. It's a liquidity issue. That's why I can trade the volatility so sick, but these big fund managers and you know, institutions, they can't do it. They can't directionally trade like that because of liquidity. Number 3, how the step-by-step strategy, I always talk about strategy and a process, don't I, can help you follow a rules-based process. I'm a rules-based trader. I tell you that every day. Oh my gosh. To take the emotions out, dude, I always tell you don't be emotional, out of your decisions and trade based on logic and have a plan. Don't be emotional. Don't get hung up. Have a plan. Have a strategy. Have a process. That's what I tell you every day, guys. Oh, how to buy wholesale and sell retail like financial institutions do? Yeah, 4 market phases, accumulation phase, use the ribbon. Common mistakes novice investors make and how to minimize them. Go back and look at my video. I already gave you 21 of the most common mistakes novice people make, novice investors. Intro to strategies for capitalizing on market volatility while managing risk. Capital protection, how to trade setups and market volatility. Why pay $25,000 for this when you could just go to me who knows way more than this? You guys should just get in the Discord, $99 a month. Well, let's see what else we got in the mail. Oh, man. Apparently, they're giving me a lot of credit cards, or trying to. Look at this. I got a ticket in the freaking mail. Let's see if I can remove my... let's see, what do I need to remove here? Well, we can do the license plate. So, I don't know if you can see that. That right there. Okay. So it says, at approximately 14:02, while conducting mobile speed enforcement, I locked a black Bentley going 46 miles per hour in a 35 mile per hour zone. Get out of here. Kidding me? I attempted to stop the vehicle. Yeah, right, dude. I would have known. I attempted to stop the vehicle, but the vehicle exited the main gate. Well, too slow, Joe. I notified dispatch. I notified dispatch for additional information on the vehicle, and it informed me that it belongs to resident Christopher blah 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 at address blah blah blah. This was issued to the resident. Dude, that's lame. Check out the whip though.
Hey, look at this.
Look at how cool.
Oh my God. Ooh.
Look at this
Ooh.
Clean, yeah?
Look at the light. Do you see the light on the floor?
That is dope.
What? Oh, it's gangsta. Yeah, I got a ticket on the Bentley. I don't even drive a lot. That sucks. Yeah, so I opened I don't like to go through my mail. I usually have my girl do it because it stresses me out. And I went through. She just gave me a pile of mail, so I went through it. Apparently, I have like $50,000 in like credit cards I could get by just calling them pre-approved. But of course, I am. Because I already have credit cards and they all have a zero balance. So, of course, they want to give me more. I mean, what am I going to do? Open up like 20 more cards and have like 50, 60, 70 grand more in credit cards and have a zero balance on everything for like a rainy day? Don't get caught up in that scam, guys. That credit market's coming for you right now. Believe me. It all goes in cycles. It all goes in cycles. Just like the markets, so does the credit markets. They're going to be coming for you. In fact, I just got a whole bunch of things from... I don't even know who these companies are. Lending Point, Rocket Mortgage, even my own community that I live in is trying to give me like an interest rate, saying I'm pre-approved on. Dude, the thing is that they're coming in full force right now on mortgages and credit cards, and the reason they're doing that is because. They know it's going to hit the fan. So what they want to do is they want to lock you in. They want to lock you into some debt. And then one day you'll need that debt and you'll use it. And then they'll have you for life, man. So be careful. That's a lesson that you guys should be old enough that are watching this channel that you've already had that lesson. Because I'm 44 and I had that lesson when I was like 18. So... Now, I have a whole bunch of credit, and I have good credit, but I also carry zero balances, except on this one, which is the black card, M-Life card that I have for all my casino trips in Vegas when I go play poker. Because sometimes, like, it's not poker season right now, but when it is poker season, you know, it's kind of expensive sometimes to enter into, like, the World Poker Tour and the World Series of Poker. It can be thousands and thousands of dollars per ticket to play, and if you lose and you want to rebuy, I mean, it can add up. It can be like a lot of money. So I have a black card for that, and but that's the only one that I really use. And the reason I use that is because every time you use it at a grocery store or a gas pump or for medical or for auto or just basically anything, you get, I think you get 3% cash back, plus you get points at all the MGM casinos, which is there's 17 properties, plus they're picking up Cosmo for the 18th one. So you get all these like tier points. So like you want to call you, I'm already the gold card anyway. So your valet, front of the line, upgraded rooms, all that stuff. But when I use the card back home in California, I'm like, it's like ringing the slots. I'm getting all the points. And I like getting the points because the points are like, oh, cool. You want to go eat at Nobu and it's a $1,200 sushi dinner for two, and then you're just like, yo, I got points. Boom, it's like $200. You're out. That's why I like the points, because when you go, you can like do like cool stuff. Oh, you want to get a limo? Oh, you want this? You got the points because you went grocery shopping. So what I do is I had let my girl the last 2 times go run the groceries on it, which was like $450 each time. So 450. It's like, I'm building up my points. So when I go out there, I'm good to go. But that's the only one that I use. Yeah, so I told you about my mail. I basically told you all kinds of useless information just to test you to see if you made it this far. If you made it this far, I'm going to teach you about the 5-3-5 market. Woo! Got some new goodies for you this time. But what I'm going to teach you is a little nugget. It's a little gem to know, to use, to have for the back of your mind. But I do not want you to trade only on this. This is just a piece of the puzzle of all the little factors you need to know, okay, to make an informed decision. So let's talk about the 3-5 market. All right, first, before we get like too into this 3-5 market and I explain kind of what it is, unfortunately, the market's moving sideways. And if you are a trader, a professional trader, or have been trading for a while, then you know how I feel about that. We don't like sideways markets. We don't want to enter and get whipsawed and chopped up and paper cuts and stopped out. And we are directional traders. We like to trade with the trend going up or going down. Seems like a lot less down these days, which is very positive, by the way. However, one thing that you should know is when it becomes super volatile, like way up 12% on a stock and slams down, and like it's been, that is volatility, and you can trade that really, really, really well and make a lot of money. But as the volatility slows down and compresses and flattens, and it's a little bit less volatile, you enter a new phase, which becomes almost, we're not quite there yet, but we're getting closer, an investable market, which means we can get back to buying our high conviction stocks. We can wait for the basis to form. We can wait for the breakouts. We can wait for the accumulation phase. We can creep above the 200. We can get the blue ribbons, and we can go, baby, go. Okay? We're not quite there yet. We're getting there, though. Unless we're coming down for a rally attempt and we're going to get rejected off the primary trend, like I discussed in this last video, which is a possibility. It's a high possibility. See, you got the primary trend, you got the secondary trend, you have another secondary trend. That's a minor trend. That's a minor trend. And you have what's going on here where you broke the primary trend, you bounced, and now you're getting rejected. Now, one thing that you may not know, of course, if you're a professional, you manage a lot of money, or this is all going to be very normal to you. But if you don't, and it hasn't been like your job, then the primary trend is like numero uno. Okay. Now you don't want to break down below it, but and I know I've given you all kinds of information about tops and topping patterns and indicators that lead to a bear market and impending recession, and I told you about railroads and how they rally only at the end, and I told you about how the small caps go first and then they try to rally and fail, and I told you about the multiple pullbacks, and I told you about the bubbling at the top and the traders with expanded volume, and when that dries up it breaks, and institutions pulling money out, and then retail can't hold it, and I gave you all these different reasons that happen every time. And then you throw in things like you keep an eye on like your yield curves, of course, and economic indicators, basically slowing growth, and we'll see if the big guys miss. This all started when PayPal. It was PayPal, Amazon, Facebook had a little thing, not this last quarter, but the previous one. That's how it all started. That was like the warning shot, and then there's catalysts on the news, and you put all that together, it shows up in the charts and the volume, the price action, like I was saying. But speeding forward through all the different videos I've explained, how we got here. Now we're here. We're past here. We're actually past probably the trading part and past we're past all that like fast money. Now we're in sideways market. We got to sit tight. We got to pick our spots. We're going to be building a watch list. But one thing I never told you guys on YouTube, or even in the Discord yet, and this is another thing that happens, and it's actually a really, really bad thing. And it shows up in charts all the time before a really bad bear market. And I was really, really, really hoping not to tell you guys this. Really hoping not to bring this up. But we are at the moment of truth, guys. We are at the moment of truth. This is what's called the Dow Jones Industrial Index right here. Okay? And this is the primary trend. Okay? They go on for like 3 years, you know, and then they have a top and then an accumulation. They have accumulation, participation, distribution, and then they you know, you get the lower high. That's when I get out, and I told you guys, and then you break the primary trend, and then you get this like speed rally up. And if it goes above here, you have a chance. But if it gets rejected, it usually means more lower highs, and you're still at the top of the big mountain that's coming down. Usually and most likely, historically, that is. Okay, I'm sorry to give you the bad news. Sucks for me too. So it is not good, and you know, didn't I call it before all these candles? I was like, I think that we're going to rally into a W and come down, and then now all these candles are on here, and here we are getting rejected. Let's go look at the other indexes real quick. I'm gonna get myself worked up. Oh, didn't even make it. That's not good either. Oh, not even close. The Russell shot out. We're done. Dusted. Gone. Can't even like let it in the party right now. Look, there's good deals out there, but doesn't mean that we found like a bottom, and doesn't mean that, you know, whatever dip you're considering buying might be the end of it. I mean, I remember not that long ago when we were all talking about how it was crazy that Square was at 196, and then it was like 180, and then it was like 160, and then it was like 150, 140, you know, like 130, and then it was 120, and then it was 110, then it was 108, then 106, then 102. And I had said about a month ago when it was at 196 that this thing could go all the way down to $31. And I said, I know, it sounds crazy. You probably don't believe me. And I showed you when the chart, when it was way up here, and I said it could fall all the way to 31. Well, it's already at 100 or 99. It was at 288. It's just the way it works, guys. You study the charts, going way, 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 way back over a century. Same patterns happen over and over. So when you see this break the primary and it comes up and it gets rejected on the other side, that's usually a really bad sign. Of course, I am very concerned personally about slowing growth. I am concerned about higher wage increases and now products inflating even higher, like at Starbucks or the Amazon Prime going from 120 to 180. That's a 33% hike, $60. So it's pretty big, you know, and people are gonna feel that. So it's hard to get out of inflation when all the companies are inflating everything, and you know, and then you got wage inflation, and then you have slowing growth, and I know that Mr. Biden, and I know that Mr. J. Powell, and I know these people are saying, man, we are on fire, our economy is strong. I don't know, guys. I just don't believe it. I'm just gonna keep it real. I don't think that we have 7% inflation. I don't have any proof that we don't. But let me ask you a question. What were your bills 1 year ago, if you haven't changed your bills around, I'm assuming, and what are they now? I contacted a couple people that I know, and I asked them that same question, and every one of them said that their bills are higher. You know, $1,500. $2,500 a month higher for the same bills. So I said, okay, well, let's say it's $1,500 more. then what were you paying before? And, divide that in, and what's the percentage? And, I didn't call 100 people or anything, but the percentage seems to be higher than 7% across the board, from diapers to food to gas to every single thing that you could think of that a person could have in a monthly budget, clothing, whatever. It's higher. And not one of them had a number of 7%. In fact, I used to order these 2 pizzas for $25, and I just ordered those 2 pizzas for $62. That's over 100%. Am I saying inflation is at 100%? No. But I don't think that the inflation numbers are correct. I do think it's over 7%, and I think that's why they like to use the word hawkish, but they're like level 1, level red, DEFCON, you know what I mean? Like, oh my God, like, what have we done? Like, we expanded the M2 money supply to no end. We propped up that stock market. We need to rip not only the Band-Aid off, but we need to amputate the leg. We need to get wheelbarrows and start burning cash, because we got inflation so freaking hot, we don't even know what to do. And I just have this sick feeling that when they say, oh, we got 467,000 jobs, it's a surprise, it's a beat. But, I'm like, well, wait a minute. We got 467,000 jobs, maybe, like, if I believe that. But let's say that we do believe that and that happened. What about the 16 million jobs that people still need to be hired for to work at all these places? 16 million. So 467,000 times 2 is 1/16 of the jobs needed. But we didn't get 1/16, did we? We got 1/32, 1-32. 1/32 of the jobs filled. We have 16 million jobs to fill. So is our economy really strong when the people that work, that pay the taxes, that we use for roads and police and all the things that we need in this country is paid for by the hard work of the American working people? It's the grease, it's the lube to the engine. So do we have a strong economy? I don't know. Is inflation really at 7%? I doubt it. I doubt it, guys. I doubt that we're at 7. I don't know. I don't have proof. Certainly, to me, doesn't feel like 7%. Ask yourself this right now. I'm going to ask you. Do you feel that things have only gone up 7% when you go to the grocery store, or you go to Starbucks, or you go to the car wash, or you go to get new pair of shoes and jeans, or anything, technology, anything from a freaking Costco card? Is everything feel like it's only up 7% to you? Do you see places that don't have people working there that need more workers? Could it all be like a little worse than maybe they're letting on? Again, why I don't like the media and the news. Not that I don't like them. I love watching Bloomberg all day. I like Bloomberg a lot. But I mean, things can be left out. Like that situation right now of the supply chain for food coming out of Russia. They're talking about natural gas, and they're talking about, this kind of stuff for Europe, but they're not talking about the fertilizers and the food supply chain that we don't get a lot from them. But this is one thing we get from them and we need for our crops and for, growing food here in the United States. And they're not talking about that on the news. That's hush-hush, because that could create riots. That could create pandemonium. I highly suggest, if you're watching this video, then next time you go to the store, you go hook yourself up with some Progressive or Progresso. I think Progressive's in shirts. Progresso and some Campbell's, maybe. They make good stuff. Swanson's another one. Hook yourself up with some canned stuff, and maybe get like a, load up bottles, a couple cases of water. It wouldn't be a bad idea to just have some stuff. Like I just went through mine, and a lot of my canned stuff was expired. So we're just gonna get some new ones, whatever, beans, just whatever, just get some stuff. because if that does hit the news, oh my God, guys, it's going to be crazy. It's going to be like crazy again. And, with midterms coming, they want to keep a lid on a lot of stuff. And Biden's approval rating is like in the sewer. Like nobody likes him. Like every single poll out there, everybody's pissed about the economy. Nobody likes the guy. Nobody trusts the guy. Everybody thinks he's doing a bad job. And this I heard on Bloomberg, by the way. This was like all kinds of like polls done from universities and censuses and all kinds of stuff. I'm not making this up. This is just what I heard on Bloomberg today. Nobody likes him. And no president, I don't know if no president ever survived a midterm with inflation, but I know that it's been really hard on the presidents that had to deal with inflation. I do know that. Yeah, and now you got this war thing, and like China and Russia are kind of like teaming up, and like we're like hanging out with the Chancellor of Germany, getting it tied. Like in der Vergangenheit habe ich eine Reise, ein Flugzeit in Deutschland. Yeah, it's getting to that point. You know what I mean? So I think we need to talk about Leonardo Bonacci. Who is Leonardo Bonacci? So Leonardo Bonacci, he was a mathematician, and he created the Fibonacci sequence. What is the Fibonacci sequence, Chris? Well, first of all, I got a few dogs. One dog's name is FOMO. The other dog's name is Fibonacci. The other one's name is Capone, the meatball. And then we got baby Zozo, Zobear. Okay? But Leonardo Bonacci created the Fibonacci sequence. And Fibonacci is used in many walks of life, including nature. So philotaxis, and I think I said that word right, are people that study the genetics, the seeds, the branches, the leaves within nature to genetically code, and they use Fibonacci. And what the mathematical sequence is it is the first two numbers added together. So if you have a 0 and a 1 and you add them together, you have a 1. Okay? Then if you have a 1 and a 1, you have a 2. Okay? And then if you have a 2 and a 3, you have a 5. Okay? And if you have the 5 and the 8, you have the 13, and if you have the 8 and the 13, you have the 21, and you have the 21 and 34, and it goes on and on and on. That's how you get the 1.68, and you know what I mean? That's how, the Fibonacci's are done. So yeah, I had to make a quick little Bitcoin little run right here. But yeah, Fibonacci, it's actually this mathematical sequence as well as the golden ratio show up in all kinds of things in life, including human DNA and even the galaxy, the Milky Way. So it's something to it's out there. It's out there, and it makes sense and it works. And I was just thinking about that Kappa that got me in the Bentley. I don't know if I should send him a Christmas card with a couple, a little envelope, or if he should not get a Christmas card for giving me a ticket. Maybe I can give him a Christmas card in a little envelope and not get a ticket. Maybe forget about that one. What a dick. God. Go 46 into 35. Do you know how much my homeowners association is? It's so expensive where I live in the homeowners association that even the homeowners association has a fancy name for it. It's not the HOA, it's the POA. Yeah. Personal owner association. Dude, it's all doctors and plastic surgeons. Dr. Dre's brother is my neighbor, Warren G. I mean, it's not a mansion, it's an estate. So, it's like a lot. Like, dude, we have our own Marine Patrol. They pull my ass over too on the boat. They got me 3 times. 3 times. Talked my way out of every one of those, though. But, now apparently they got to come over because of COVID. They come to your dock now. I have my own dock and my own hydraulic lift. The boat comes out of the water. It's cool. But I guess you call them and then they come to you and they're like, make sure you got your life vest for the kids and you know your lights and all that stuff. Anyways, I got to think about if I want to give this cap a card. I can't believe he got me. You know what else is messed up about my hood here? Um, check this out. Imagine you have a wild party. Now I know a lot of you guys don't know me, but there's a lot of crazy stuff that I've done in my life. Like I have 73 records out worldwide. I was a touring DJ for 11 years. What else? I was just watching that Pam and Tommy, and it just reminded me I had dinner with Tommy Lee at Simon Restaurant back at the Hard Rock before now they have the show in there called Magic Mike, but before that they had a club called Body English, and I used to DJ there. And I also used to DJ at the Hard Rock pool when it was called Rehab, and I played one time there with Ja Rule and also Donald Glaude and some other people, and partied with Ja Rule and all the Dolce & Gabbana models up in the penthouse. Wait a minute. You guys aren't supposed to know about all that stuff, are you? But I did meet Mick Fleetwood one time too. I've done a whole bunch of stuff. I partied with Hugh Hefner at Hefner's Pad. That was cool. Anyways, we got to get back to finance. Where were we? Leonardo Bonacci and Fibonacci. So yeah, I mean, look, let's talk about the 3-5 market. That's why we're here. I've just been babbling. In the stock and crypto market, there is another sequence that is used, and it's actually what creates the ladder steps up on charts and the ladder steps down. And it's known and seen throughout charts going back since the beginning of charts, called the 3-5 market. Now, it can be used and noticed and seen not only 3 days down, 5 days up, 3 days down, 5 days up. That's very common. It helps you identify, oh, I want Microsoft, but it just went up for 3 days, or it just went up for 5 days. Let's let it go down for 3. Well, it's only gone down 2. Let's wait one more. It goes down, you buy it, it goes up 5, you're in an uptrend. You're making stair steps up. Same thing when you're in a downtrend. Right now we have a lot of 5-3s. So we go down 5, up 3, down 5, up 3. Okay? You're going to notice it in charts. And you can't just do everything based off of that. Okay? But it's just one of those things that's tucked away in the charts. And a lot of technicians and tacticians and chartists, they will know that not only do you have the movements within like the week or the month, like that, the 3-5 market, but the longer bull run will also be in 3-5 stages. One of the guys that I look up to and love his system, it's my favorite system, it's the system I use, it's by William O'Neill, and he doesn't mention the 3-5 market, but what he does is he does mention it. He just mentions it in a different way, but it's the same thing basically. But O'Neill's a little more detailed, because what he does is he talks about the first base, the second base, the third base. You know, coming out of a base and a breakout is essentially where the next leg of a bull run goes. And the same thing happens in these long, like right here, this long thing right here, you know, whereas you might have a base right here, and here's the breakout that O'Neill was talking about. But, you know, from a technical standpoint, you also have these 3 legs. So you get the 1, you know, you can call that 2, and this is 3, and then boom, and then you start the next one down, you know, and that's how it works. And you can go to a lot of charts and see this. Tell you what, let me put up some charts for you so you can see exactly what I'm talking about, okay? Alrighty, I have located some charts for you. I also noticed that the Bitcoin trade is up quite significantly, but I will tell you right now, this is about to get bad, because it was up at 49,000 just a second ago. All right, so see how that's turning? That's no good. Okay, but here's the deal. Here's the deal, all right? We'll see what's going to happen, but I'm going to tell you right now, it's going to come down a lot. Like, this could lose half its money before it goes back up. There's the red ribbon. Ooh. Shall we abort? Okay, we'll come back. We'll put it in later. All right, so listen. On a different note, I found you some charts. Check this out, baby. All right, here we go. All right. All right. So, chart number 1. Extended trend line from previous chart. So what they're showing here is that you have, a touch. It's showing significance of a primary trend, and it's showing that the trend is broken, okay? And he writes, after the previous accumulation phase, the new trend advanced for 3 years or more, 3 and 5. Things go in 3s and 5s. Just like Fibonacci has specific sequences that are found throughout the world. Just like you'll see 3s and 9s a lot. And once again, the trend remained in force until it was broken in late 2007. So the primary trend was broken. Okay, so let's come over here and let's go look at an index. Let's look at the NASDAQ on the daily. And you can see that the NASDAQ on the daily had this long primary trend, and then it broke the primary trend, this long blue one, right? So touch, and it made a higher high. It barely made a higher high, and then it started making lower lows, and I would have caught it right that first one, but then it goes waterfalls. They try definite lower low, and then trend is breaking, and then when it comes up and it rejects, that's when we have a problem. So let's go look at another chart. Okay, so what this is showing right here is, and sorry it's so nerdy that I'm like breaking out like old textbook charts, but these old charts right here they're really you can just get them for free on Yahoo Finance. Okay, you don't have to pay for like a big service. But this is the stuff that you got to know. So this was the previous primary trend that I had just shown you, and that's when it broke right there. It created a new direction, a new primary trend going down, just like we currently have a new primary trend. That was the old one that went up, and now we have a new primary trend coming down. This one coming down, okay? So sorry, I don't know what's going on here. Too many things going on. Okay, so the trend line was broken, a new direction was found, and then it did this, and it came down, and if you notice, it did this whole thing before it really got to confirm a new direction. This is the process that I'm talking about. It's a process to come to the bottom, a process to come out of it to create a new trend. So therefore, it started a new trend, and this to here was leg number 1. Okay, let's go look at another chart. I need to have a better way to do this for you. Okay. Another chart. So, many times the daily bar count may be a day or two off one way or the other, but the general moves show up many times as either 3 or 5 days. Okay, so now in here it's talking about the primary trend coming down in 2008, and then it's talking about the secondary trends, which are pullbacks. Okay, now that's different. That's in my courses, and I've touched on it a little bit in videos. But it's important to understand the 3 major trends are the primary, the secondary, and the minor, and they all carry a different significance. Now, for the long-term investor, the minor trend is just they don't even pay attention to it, but. Okay, so here's again a 3 and 5. Let's look at how this carries over into the bigger picture on the macro index. The market has 3 legs. Like O'Neill would say, a first stage base, second stage base, third stage base. And you got to be real careful. You need to be pulling profits out, because by the time you get to that 4th stage base, way up the mountain, that he talks about, and he's right because I study charts and I trade that system and I know better. I know that you get those loose, wide, sloppy bases up top. He's right about that, man. That guy's got the base thing down, man. Highly recommend learning from him. Love it. So, he doesn't talk about necessarily the legs. He talks about the stages of the bases, but I think both authors mean the same thing, and they're both picking up on something that's critical and known. They're just looking at it a little bit differently, and I look at it both ways. So, I guess this is more like the tactician way, but I actually probably lean towards more looking at it the O'Neill way personally, just because I'm more always thinking about bases and breakouts and stuff. But if you really take a step back and look at charts and macros and indexes, you'll notice they have these legs. And here he indicates that first leg on the primary, the second leg, and the third. Whereas coming off of this area was probably a base into the first, and then another second stage base into the second, kind of thing for O'Neill. So let's look at another one. Okay, let's see what we got here. See how each leg up is clearly defined. Something correction. These corrections are secondary trends. Yeah. So this is the primary trend coming down, and these pullbacks are the secondary trends. And notice how the author is showing 1, 2, 3 legs, first, second, third coming down. Okay, this was at the crash at the 2000 and the 2008 is what the author is showing, 2 major crashes. Okay, and then he's depicting right here. I think what he's talking about is sometimes the primary trend can change trajectory. Okay, it can steepen and worsen on the way down, and it can get more bullish on the way up. One thing I probably haven't told you on YouTube for sure, probably course members know, but be wary of any angle that is beyond 45 degrees. They tend to fall hard and with a higher probability. So you want to keep an eye on angles. But it is true that a primary trend can switch directions. It can not directions. I mean, it can just see how this one's going at this angle, and then it kind of went steeper and created a new one as it had its multiple touches. That can happen. It doesn't always have to be just one straight line. It usually is, but it doesn't have to be. Sometimes it'll go in a sharper angle. And then this is the last image I got for you guys, and it's just showing the legs. So 1, 2, and it's going into 3. And this is a pullback or a secondary trend, which might be a trend reversal. I'm not sure what's on the second page, but again, showing first, second, third. So you're going to get that on the macro indexes, but you're also going to get that within the month. You're going to have, depending on which way the direction of the trend is going, is it going up 5 steps and down 3 and up 5 and down 3, and it's making a stair step up in the trend that goes on for 3 years, and you're looking more down on the daily every 2 weeks or every month? Or is it going down where it's kind of coming down 5 steps and then up 3, like what might be happening, unfortunately, on, say, an index like the Dow? So are we coming down? This is pretty violent. This is probably like a 7 and 5, and then it might end up coming down to be like a 5 and a 3, and then a 5 and a 3 and a 5 and a 3. It might turn into that, but they get real violent at the beginning, so it could be a 7-5 kind of thing. The primary trend's important. Breaking through it is bad, and getting rejected off it is bad. Okay. Sorry to figure it out live on YouTube for you guys, but I'm a technical guy. I'm a technical analysis guy. I can read these charts really well, and that's why I pick up on things, way before everybody else. And I was able to tell you back here to get out that this whole thing was going to happen, and I made videos the whole way through why I thought so. And then when this came down, I was like, we're screwed. This is real bad under the 200 primary. Then it bounced, and I go, I think we're going to do a W way before any of this even happened. And here we are. We made the rally, and now I see the rejection, which would make the W. Hopefully the leg is a little higher, and then we'll see what happens if we can make it up. But if you remember Bitcoin and its distribution phase, it does this. It has this bubbling top thing before it starts going down. So it might make a whole nother lower high where this comes up, and then it starts coming down. I'm not sure. I'm not sure. But yeah. So basically that's the 3-5 market, and you can use it to your advantage in this way. If you want to buy something, it helps you know where you're at in the market. Are you at the top? Are you at the accumulation? Are you in the participation phase? Are you in day 2 of day 3 of the 3-5 market? Like you can start to hone in and figure out where you're at from a technical perspective, and just the way that the charts move and the money flows and the markets work. It just they work in these patterns, and not every time, all the time, but you'll notice them. You'll notice them. And you'll start noticing a lot of different things. Understanding volume is really important. There should be an entire courses or books on just volume. Volume is so important. Volume and price action. You really don't need any like indicators or anything else when you're super good. You could just really I've literally been not using any indicators at all. I've just been literally using like momentum trading, directional trading off momentum in small time frames, and I've been hitting it like really fast and hard, and I'm good at it. Like I know how to do it really well. I know exactly what to spot. When certain things line up, it's like go time with a high probability. If you know that if you know you look at 1,000 charts, and every single time that these things all do something at the same time, that you have like a 6% chance that it's going to continue to go in that direction for you. The odds are in your favor. You only have like a 4% chance based on the 1,000 charts that you looked at that it won't do that. That's why I'm like super successful at it, because I know everything is about probability and odds and the chances of, and I study the charts to understand the probability. Just like I understand poker extremely well, and I understand money really well, and finances and budgeting, and I understand operations and how to be tactical and strategic, and I'm good at that kind of stuff. So you understand the probability and the odds, and then all the charting. It's caught up to me where I figured some stuff out, and it's working. So, yeah. So look, I babbled a lot. It's probably a pretty funny video, and I had a good time. But I do need to get it edited so that I can go to bed and see if we are in a sideways market and just gonna not trade, or if we're gonna actually get to trade tomorrow. I'm okay if we don't. I'm not really that eager to like trade right now. I'm up on the year. I'm fortunate for that, and I don't know. I don't want to like lose the money. It is the market. It is freaking crazy, and I made a lot of that money because it was super volatile and it was coming down really hard, and I put my foot on the gas on triple leverage, and I just trailed stops, and I just got out in profit before it started going the other. I just was moving fast. I just super fast trading, and it's slowing down now, and I don't want to just like, oh, I just lost $7,000. Oh, I just lost $12,000. Oh, I just lost $25,000. Like, I don't want to do all that when it'd be like, wait a minute, the market's changing. Like, you got to figure out the new algorithms. You got to adjust your system now to the market and find the right flow with that market, because it has changed. The winds have changed a little bit. Not all the algos are attached to Bitcoin anymore. Not all the algos are different right now. So I got to figure out the new algorithm, which I think I have figured out, but I want to just make sure. Anyways, still babbling. I love you. Who loves you? Welcome to the wheelhouse.